The latest housing market data shows the median home price finally halted its string of record highs each month with a slight pullback. Is this the start of a larger downtrend in home prices? In today's video, we're going to look at the latest supply and demand data for the U.S. housing market and assess what it means for prices in the months ahead. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking analysis for the U.S. and regional housing markets. If you're new to the channel, my name is Eric and I'm a professional economist in addition to being a licensed real estate agent, so I can bring you a unique perspective you'll be hard-pressed to find on other YouTube channels. Let's not waste any time, get right into the latest data. According to Redfin, a national real estate brokerage, the January U.S. median home price came in at $438,000 on a seasonally adjusted basis. This was just $1,000 lower than December, but it does end the streak of record high median price each month. We know buyers are facing big affordability challenges in today's market, so is this the start of a new downtrend in home prices? Will we see the market start coming back into balance on an affordability basis? To get a better sense of the current market, we need to look at the underlying supply and demand trends. Let's start with the demand side of the market. The number of homes transacting each month remains at historical lows, and in January, sales did tick down a bit. The sale to list price ratio, which is a good measure of the intensity of demand, remains below 100, meaning homes are selling below list price on average, and it also ticked down in January. The average number of days a home is on the market before selling has almost returned to where it was before the pandemic, but was little changed in January. Overall, the demand side of the market remains weak and got just slightly weaker in the new January data from Redfin. Let's take a look at the supply side of the market to see if there are any big changes there. The inventory of current listings did tick down a bit in January, but the number of new listings increased by a larger margin for the month. The lower sales in January and the increase in new listings was enough to push the month's supply up for January. So we are seeing an overall increase in supply for January as well as the continued weakening in demand, both of which would account for the slightly lower median home price for January. Ultimately, 1 month of data does not make a trend, so it's too soon to say whether the January decline in the median price will continue. There's one more chart I want to show you. This is the percent of active listings that has dropped the list price while it has been on the market. It came in at 19.4% in January, which was the highest level since Redfin began collecting data on it in 2012. Sellers are taking notice of the weak demand, and for those homeowners that are in a position where they need to sell quickly, they are faced with the reality that they may need to drop the list price to attract more buyers. Overall, the supply and demand trends suggest there is downward pressure on prices right now. We're nowhere close to a housing market crash, but then again, these things don't happen overnight. The housing market doesn't turn as fast as the stock market, and these things play out over months or years. We'll need to keep a close eye on the latest data as it comes in. What do you think? Is this the start of the much anticipated downturn in home prices, or should we expect prices to continue heading higher and January was just a blip in the data? Let me know what you think in the comments section down below. If you want to stay up to date on the U.S. housing market as new data comes in each month, make sure you are subscribed to this channel and hit that notification bell down below so you won't miss my next U.S. market update when it comes out. And if you could do me a favor and hit that like button to support the channel, it would be greatly appreciated. Thanks for stopping by. I'll see you in the next video.